traders, welcome to the TMT stock market strategy video for Tuesday, September 6th. Non-farm payroll numbers came out on Friday. They were weaker than expected, and that put the Fed basically on hold for raising rates in September, and they're actually talking about even December. Now, that's just speculation. Are they going to raise rates or not? Not sure, but I think they have a problem anyway because the rates are rising, and I want to cover the bonds. I want to cover TLT, which is the bond ETF, and I want to show you guys the 10-year, which I've showed you before. Okay, let's get right to it. TLT, big symmetrical triangle. I really think, and I suspect that we're going to see 134, 135, and that's going to be right here, right in that gap area. That little gap area of support here, and you can see the thin zone that we have here. So that thin zone is going to really suck price down to this next level here. I wouldn't doubt 137 would hold on the bottom of the price channel, but we are below the 20 and a 50, and we take this out. Now these are continuation patterns, but however, if we do break lower, follow price. Price should break down to 137 and then ultimately back down to the 134, and then we would reevaluate it. But why would that be? If anything, it would be rates, right? Let's take a look at the 10-year. You could see that here. Here's the 10-year with a beautiful ascending triangle, which measures right up to the 200 at one spot 83. If that were to happen, TLT would easily fall down to 134. Would sell off easily to 134. So it looks like rates are rising. We did have that one inverted head and shoulders, but it got too long in a tooth, and that turned into a nice symmetrical ascending triangle. So looking for higher prices, and I do believe that rates have bottomed. I absolutely believe that. It looks like that trading when you're trading bonds. Now, what happens if rates start to rise? Well, remember, there is for the last 10 years, well, not 10 years, but since 2009, call it, last 5 years, we've had a market rally on low interest rate, right? Now we have now rates rising. That may go away, and then you might have a problem with equity. So we just got to keep in mind. Let's keep a look at this and keep close eye on those rates, because I do believe the 10-year looks like it really wants to get to that 183 area. VIX very low. We're extremely low here. Placement levels, you could see that clearly below 12. Had a big down day on Friday. So looking for VIX to stabilize here, and looking for the VIX to really start to excel higher and pop higher. You can see these bands are really tightening here. And then I'll show you that average true range, the ATO with the SPX. You see it's starting to pinch here. Now we could easily get back down here again and then start to rally, but it's going to need a catalyst. Something's going to need to happen for the VIX to really explode, since we've been really in a range pretty much all of July here and August, and now going into September. So keeping an eye on the VIX, very important. Next is going to be that the ATR. You can see again here at complacent levels. So this is something I'm going to be monitoring on a regular basis here. And you can see we're just holding up here for 2 full months, just doing absolutely nothing. So if this starts to go and start to rise, you're going to see a pickup in volatility, and that should put on a sell signal into the markets. The TMT trading model right now is still pretty much neutral to slightly bearish. So we need more price to move, and the price is just not moving. You can see here one of our models, the NYUD, that's in our model actually, is still below zero. It basically popping its head above zero. But you can see here we've been really starting to really now hover around that zero area. Nothing bad to write home about. However, if we start to get a little bit more downside pressure, we should stay down below zero like we did here. But just something that we're going to monitor as well. There's a lot of signs that the market is ready to go, ready to sell off, but without price moving, it doesn't matter. It's irrelevant, guys. So I just wanted you to be aware of that, okay? Here's the dollar. I want to show you what's going on with the dollar. Now, the dollar actually sold off and then rallied. And on that bad non-farm payroll number, that's actually very interesting, because remember, if you also have a strong dollar, you're going to hurt equity markets and equity prices here. So dollar looking pretty strong. You could see here in GDX. GDX dropped back down to that 61.8% retracement. All 3 targets are hit, and now we're just basically back testing these lines. I would not be overly bullish at the moment. Let's see price back test and maybe even fail again and get one big flush out of the market. All the weak hands out. I do think that gold and gold miners are starting a new bull uptrend, second stage of a bull uptrend. But at the moment, we still don't want to be catching a falling knife here. So I do think that we're looking for lower prices. I would like to see the GLD get down to that double top measurement of 120, call it, and the GC contract. I would love to see a 1260, 1280 print, and then that's when we start nibbling into the gold area. But not right now, not at the moment. This is just backing and filling here. Next is going to be Nugget, which is the three-time GDX Gold Miners ETF. And you can see here, we really didn't move on Friday too much. Actually put in a doji candlestick. So I could see a little bit more work being underneath the proprietary price channel, and then we would reevaluate it. Next, we'll get right into the indexes. You can see here, we're on our fifth wave. And this should be a really nice little move. Now you could see we had two dojis. We had a doji on Thursday and we had a doji on Friday. And where do we go? We went nowhere, guys. We still within our respected ranges now. So we still have dollar increments of support: 217.5, 216.5, 215.5, and ultimately 214.5. So these are still valid for support areas. Okay, and then of course the resistance area is going to be 219.50. All right, does look like we're in our fifth wave. Let's just see. We just got to get price to start moving again. Here's the Spiders daily. Here's another view of it from what these thin zones are, and we're really stuck right up in this area here. And this is an area, and let me just pull this right back up, and that's going to be that area we need to really get out. That 219.80, 220. All right, we get that. We get to that point. We might push up to that 222 area, which is that inverted head and shoulders. That is the last index on the Spiders that did not hit the target off of the Brexit lows. But you could see the 60-minute Spiders. What a mess. I mean, literally, guys, a big, choppy mess here. And this is what happens, when you're in these range-bound trades. But I do believe volatility should be picking up. We do have people and traders coming back to work. Everybody's back to school. So give it another few days to today, tomorrow. But I would suspect volumes start to come back into the markets. Here's the Iwm Daily. Iwm does pretty well between now and October. So let's keep an eye on that as well. These are some key areas here, and I just wanted to show this. This is what we provide for you guys in our proprietary trading room. Next is going to be the Qs, and as you can see here, I marked down that's going to be a real key and pivotal low that we need to hold, 116. So 116, we can get down below that. We'll probably hit our proprietary price channels of 115.34. All right, guys, I hope it helps. Have a great day, and we'll see you tomorrow. Take care. Check us out at TMT at tradingmarkettechnicals.com. Keep an eye on any upcoming events that we have as well. Take care.